Hey guys, I hope everyone's doing good and keeping safe. Options trading can be very confusing, especially for the average beginner. But in this video, I'm going to try and demystify options for you guys so you better understand, or you just understand what options are about and how you can profit on them. I mean, I've been trading for like a good few years, over 3-4 years successfully in options trading, and my main strategy is about income generation, which is what I'm going to show you guys in this video. So the topics I'm going to cover: what is an option and basically how they work, etc. And two, I'm going to show you guys the steps that I take to finding potential winners in the market, so ones that are good for income generation, and I'm going to explain why those steps I take them. 3, how to place the trades. So I'm going to show you guys the different brokers that you could use and the ones that I personally use, especially if you're located outside the United States like myself. I'm based in the UK. So guys, make sure you watch to the end so you don't miss any fundamental information, because every step is like a systematic approach leading into the next step. So it will make no sense to head over to placing a trade step when you've not looked at basically what an option is and how you can go about finding winners, etc. You're setting yourself up for failure, so you need to see every single step. If you're new to my channel and this is the kind of content you guys enjoy seeing, then make sure you subscribe and of course hit that notification bell. I might actually turn it into a series because there's a lot more to options trading than what I'm going to show you, but I'm going to show you the steps to actually being successful. But if you want to fully understand options, then I might turn it into a series. Let me know in the comments below if this is something that you like to see. And guys, I know it's a bit of a long introduction, but I just had to get all that out, so you guys understand what's going on and know what to expect for this video. With that being said, let's get this bread. So before we get started, jump into and start looking at options contracts, buying, selling, etc. And by the way, if this strategy and pretty much a lot of the strategies that I employ in options trading is actually not get rich quick schemes. So if you're looking for a get rich quick scheme, then my brother, my sister, you're on the wrong video. However, this is get rich eventually, like a mechanical wheel. You're turning that wheel day in, day out. Basically, that wheel is successful. So as you're turning that successful wheel, eventually you'll become successful. So that's what I'm going to show you. But before we get into that, let's go into step 1, which is what is an option. The term option refers to a financial instrument that is based on the value of underlying securities such as stock. An options contract offers the buyer the opportunity to buy or sell depending on the type of contract they hold, the underlying asset. Okay, so the best way that I can describe this: imagine you want to buy a house, right? You've done your research. You see the house value today is sitting at $100,000, right? So $100,000, you believe that, okay, that area is going to go through some major developments within the next year that's going to make the price of that house like go up, but you don't know what value or how much it's going to go up by. You don't know all that. So you go to the buyer and say, right, I want to buy an options contract for this house. I want to, in a year's time, or up to a year's time, I want to be able to come to you and say, okay, I want to exercise my right to buy this house at $100,000. So you guys get into a contract and say, okay, that's fine. Maybe the guy sees that the area doesn't think that there's going to be much and sees the price and it's like, let me take it. Let me take the deal where I can. So assuming you were right in that there was going to be investment and there was going to be development in that area that raises the house prices. So the price of that house has gone from $100,000 all the way up to $200,000. So effectively it's doubled within, let's say, 9 months. You come back to the buyer and say, okay, well, I want to exercise my right to buy this house at $100,000 because you're effectively gaining $100,000 in profit, whether you want to flip the house or whatever you want to do, right? But you know that you can gain $100,000. So the person who sold you that contract, he's obligated to give you the house at $100,000. Let's say, hypothetically speaking, that the price went down to $50,000, right? You can just walk away from the deal. You're not obligated to buy that house, okay? You have the right, but not obligation, whereas the seller has the obligation to sell you that house, okay? So you bought your house at $100,000 and you've made $100,000. So options effectively work in the same way, but with securities. So options work in that way, and I hope that really describes or explains to you guys what options are about in a nutshell. And if you want me to do a little bit more in terms of videos, etc., on describing going to depth into options, then let me know in the comments below and I can make this a series. But for the sake of making this video 50 hours or as long as the Lord of the Rings movie, I'm gonna stop there. Okay, so now you know what options are, or I hope you understand the concept behind options trading and options, what they are. Now it's all about the next step, which is finding potential successes in the market. The way I do this is, let's be real, right? We don't have time. Me personally, I don't have time to troll through 40,000 companies, securities, all that's listed on the NASDAQ, NYSE, all these exchanges to find a potential success, right? So what I do use is screeners. So a screener is a very, very useful tool. So see it as like filters. So you're basically filtering out what you don't want to see and you're being left with what you do want to see based on your strategies, based on your outlook on the market, based on your sentiment, whatever it's based on. It could even be based on what you woke up with that morning and thought, but either way, it filters out what you don't want to see and filters in or maintains what you do want to see. So the whole point of it is effectively shortening your whole research process, so that way you can quickly find whatever you're looking for in terms of stocks and securities, and also basically lowers the chances of you just trading for the sake of trading. Now, the filter I use, or the screener I use, is Finviz. There's different option screeners like bar chart, etc., that people use. I don't personally use bar charts, so I'm not gonna sit here and pretend to you guys that I'm an expert at it or a guru and I'm gonna show you all that. No. I've used Finviz. I use Finviz even for my dividend portfolio. I use Finviz anyway, anytime, any strategy that I want, it covers it. So the settings that I use for the strategy that I'm going to show you guys, basically it's a vertical spread options, and I'll explain a bit further into that, but it's an income generating option strategy. First of all, go on to finviz.com, all right, and then once you're on it, you go to screener, and then once you're in the screener, click all. What you have now is you effectively have your fundamentals and you have your technicals all mixed in one, right? So you can pretty much filter out to whatever, God knows how many filters you want. If you just want it down to that one stock, you're very specific, or if you're not specific, you can filter. So the filters I'm going to use, right, based on my strategy is, first one, go to options short optionable, all right, because I want to know that the stocks or securities I'm looking at are optionable, right, because obviously I'm doing options. As you can see, the possible options that have come down is 5,400, but if we remove that just to see how many are there, there's 8,500, so it's narrowed it down by roughly 3,000. Okay, so the next step I want to take is basically I want to know, okay, I'm going to do vertical puts, so I'm going to do vertical calls. Think of it as like a call is you're basically long. You think that the price is going to go up. If you believe the price is going to go down, you buy a put. Now, vertical spreads, because I'm selling, is reverse. So if I believe that the price is not going to go down, if I believe the price is going to go up still, then I sell a put, meaning that I don't think the price is going to go down. All right, it might seem a bit complicated. Again, let me know in the comments if you want in-depth analysis or in-depth explanations into this, but we don't have the time on this video, so I just need to show you the steps. All right, so let's just assume I'm going to go for puts, right? I don't believe that the price is going to continue falling. So what I do is I go to the RSI and click oversold. Okay, so this one is key because that means that if it's oversold, I believe that there's going to be bullish momentum coming into the market. Okay, so oversold 30, so I want it to be really oversold. Okay, so as you can see, he shortened it down from 5,400 to 568. Now the next thing, and this is very key, is I want to go to within the volume. All right, so you can have your volumes. You've got your average volume and you've got your relative volume. Okay, so go to the average volume, and the average volume, I want it to be over, let's just say over 300,000. You can go over 500,000. You can go over 1 million. Now, the reason that I'm going through average volume, and average volume is a must, is because with options, you want there to be liquidity in the market. With anything really, if you want to trade, if you want to get in and get out the market, you want there to be liquidity. You want to make sure that when you're in profit, if you click sell or if you click close, that trade is instantaneous, because there's somebody out there who is willing to take the opposite of your trade. So if you want to sell, there's someone out there who wants to buy. And this is key to this strategy, because if you're selling it, if you're basically setting take profits, right, you want there to be liquidity, and you want it to be, when you're not at your desk, you want it to be instantaneous still. So average volume, this is over 300,000 shares are traded on a daily basis on average. Now that's more than enough. Unless you want to buy thousands of contracts, then you obviously go to over 1 million. All right, the bigger your pockets, the more contracts you want to buy or whatever, or sell, then basically the more volume, the more volatility you need within the market. Well, the more liquidity you need in the market, not use volatility. Volatility in the form of options is something totally different. All right, so the next filter that I'm going to look at is the price. So I'm going to have a price basically over, let's just say over $30, right? So you can do your price anyhow, and basically the strategy that you go with, if you're just buying contracts, you can do a price pretty much up to $10 or even more. But because I'm doing credit spreads and I want the spreads to be a decent amount, and I want the price to be a certain amount and be somewhat stable, I'm going to have a price above $30. So if I want a 10-width spread, then $30 is going to be enough, because I could go down $30 strike down to $20 strike, and get my 10-width. As you can see, it's narrowed it down from 500 down to 116. So you started off with 8,500, bearing in mind now we're down to 116. And we've got a couple more filters to go. So the next filter is country. So I click USA because I like to play with USA stocks, etc. I'm used to all that, like American stocks, American companies. I've spent a lot of time studying them and stuff like that, so I'm used to how those kind of work. If you're very confident and you want to go to less efficient or inefficient markets, like emerging markets and stuff, then you can go ahead and pick like South American markets like Argentina, Brazil, all of that. There's a lot of money that you can make if you understand emerging markets, right? But for the purpose of this video, I'm going to stick to efficient markets, which are American markets, right? So that's narrowed it down from 115 down to 105, which it's only taken or filtered out 10. I believe part of the reason why this strategy should work or could work is if you go with bigger companies which are more stable, like you're not going to get a lot of volatility in the market. You're not going to get the market, today the price is $300, tomorrow the price is $100 and you're totally blowing it. You don't want that. So I'm going to go with like pretty much large, let me go with large 10 billion to 200 billion. Or actually, you know what, let's just go large plus, so over 10 billion, because over 10 billion pretty much means that the large companies, large cap companies, and they're very stable, or they're somewhat stable. They've been in the business for a lot of time, like Coca-Cola, all that. So that way, that for if you place an option for a month, within that month, not much is going to happen. Especially this strategy, you don't want much to happen, which is a good thing. So now that's narrowed it down to 58. Okay, so 58, you could go ahead and play with some of these other filters if you want, but it's taking it down from 8,500 to 58. Now, that might seem like a lot, but what I'm going to show you guys is just a quick way of pretty much looking at things and seeing, okay, is this an opportunity or is this not? All right, so if you go to the charts, from overview, you've got valuation, financial. Click on the chart, and that way you can quickly see what the charts are saying. And because I've been doing this for a long time, so I pretty much know what I'm looking for, etc. So from here you can use a lot of technical analysis or quick technical analysis reviews to see, okay, is it sitting at a support, is it sitting at a resistance? So once you have all that down, then you pretty much know, okay, this is good. But if you want to narrow it down to say less than 58, then you can just upgrade this to maybe over 1 million. So over 1 million, now you're down to 42, and basically a lot of these are very stable. Over 1 million is very good. Okay, so now you've narrowed your potential winners down to 42, right? So I'm gonna pick just a couple, right, and to show you what I'm kind of looking for, bearing in mind that we're looking for credit spread puts. We're looking to sell puts, so that means that we don't believe that the price is gonna drop below a certain amount. All right, so I'm gonna go with, and these are all below, or these are all 30 and below. All right, so I'm gonna pick just out of random, right? I'm gonna pick ABT, I'm gonna pick Amazon. I'm surprised Amazon is below 30, but with the current climate in the market, you know, it's all bearish at the moment. Like, so even companies like Amazon are suffering, you know. So I'm gonna pick ABT, I'm gonna pick Amazon, I'm gonna pick Dash, right? So ABT, Amazon, and Dash. So first of all, if I have a look at ABT, all right, so I bought laboratories. All right, so I bought laboratories. Right now the price is below 30, and as you can see, which is pretty much good, that's what we've been looking for. So you can see that the market, the filters work very well. And if we look at the volume up here is sitting at 7.7 million shares. The average is 6.6 million. So there you go. It's a very good filter, just filtering out 42 as opposed to 8,500. All right, so now that the price has been dropping, I'll do some technical analysis, some quick technical analysis for you guys. Looking at this, the price has dropped, broken below this support. All right, so this support is now technically seen as a resistance. So if we're going to buy a put or sell a put, sorry, because we believe the price is going to go up, it might go up to this level and basically not do anything. Like, it just starts falling again, especially looking at the RSI here sitting at 44, but the RSI right now is at 24. The price is likely to head down to this level, basically to test this support at 115. Basically how I know that is that there's a build-up of bearish momentum following that break. I would have hoped for is that there was some RSI divergence, so that's a potential, could be potential success if you're looking to be aggressive. But if we have a go back to Amazon, right? So let's have a look at not back to Amazon, let's have a look at Amazon, for instance, right? Amazon, it looks like a better contender right now. At this point was 21, and there's some RSI divergence because the price is roughly around the same, but the bearish momentum is coming to an end. You know, it's sitting at 22. So from 21 to 22 is slight RSI divergence, but look, there's some distance for it to go back up to the 10 moving average. And again, if technical analysis, if you don't really understand what I'm talking about, that's fine. You know, let me know in the comments below. I'll be more than happy to do a series on technical analysis, so a lot of these will make sense to you guys, because I want to take this channel in that direction anyway, to showing you guys how to be successful in the markets, you know, because right now 2022, we're off to a bearish start, right? And there's a lot of people losing hope because, let's face it, last year was a good year. You know, you can throw a dart at any stock and the price would have rose, you know. So now it's the opposite. Throw a dart at any stock, the price is falling. I mean, look at Amazon, the giant, it's falling, you know. So man like Bezos right now is like shit. Where we're going to potentially set our strike prices. Okay, where do we think that the price is not going to go below? Bear in mind, if you're doing stock trading or like day trading, or if you're doing forex trading, you're going to set your stop losses, right? But see your where you would set your stop losses, see that as effectively your strike prices. Okay, so I believe that the price is not going to go below within the next month or something, and you don't have to hold it for a whole month. This is something, when I go into options trading, I was holding my contracts out until expiry, and then I'm like, something that was a very good is a killer of a trade in the first 10 days turned against me within 15 days, and then I'm there like holding this bag, this option bag, and I'm like, you know. So you don't have to hold the options, and that's where I come in with the take profits, etc. So I don't believe within the next month, and there's a reason I'm saying next month, because that's where I'm gonna set my expiry date, you know. So within the next month, I believe that the price is not gonna go below 2,700. So just to make things whatever, I'm gonna say 2,700. The absolute bottom right now is at 2,707. So I'll give myself some extra room, and I'll just say 2,650, right? So just hypothetically speaking, 2,650 is going to be my absolute bottom, right? Where I believe that the price is not going to go below, you know, within the next month. Okay, so that's my strike price. The next month, what's today? today's sitting at 26th of January. So let's say 28th of February, the price I don't believe is going to go below 26.50. So it'll be interesting to see this, to see if this trade actually ages well. But anyway, now I've gone from knowing what options are to how to filter and find potential successes. Now we found potential successes, we do some technical analysis just to see, okay, what is going on. Because with options, yeah, you need to know fundamentals behind the company, but only if you're looking at holding that option for 6 to 12 months, right? If you're looking to take leap options. But the strategy that I use is mainly just technical analysis. So based on my screener, I've already filtered out what I don't want to see. So what I'm left with are pretty solid in a sense, because Amazon is a big company. Yeah, it's falling down to 30, but chances are it's definitely going to head back up to a certain level because a lot of people are investing in it. All right, so technical analysis is more than sufficient for what we're trying to do right now in terms of generating an income for this month on Amazon. Okay, so now we understand what options are, okay, and we've seen how we can go about filtering to get the potential successes in the market, like ones that are going to make us money, etc. We've gone how to filter those, and we've done some technical analysis, and we're happy that that's basically the trade that we're going to place like for the next month, or basically place in our portfolio, okay, to try and get us some income, etc. So basically make money off Amazon. So the next step is, how do you get a broker account? This is especially good for beginners and even experienced traders, because they might not be getting what they want from the brokerage account. So I just quickly googled the best brokers for options trading, just so you guys can see a comprehensive list, and then I'll go into which ones I use and why I use them, and then we'll go into the platform. I'll show you guys a demo version of the platform, that way I can place this trade, right? So best brokers for options trading in January 2022. Brokers you've got are Charles Schwab, Fidelity Investments, Interactive Brokers, TradeStation, Ali Invest, Robinhood, First Trade, TD Ameritrade, E-Trade. All of these may be good for you guys, but because I stay in the United Kingdom, the ones that take us are Interactive Brokers and TradeStation. Funny enough, I've got an account in both Interactive Brokers and TradeStation. So the reason I used to trade a lot on Interactive Brokers, but the reason I went away from Interactive Brokers is I didn't know how I could take profits. I tried everything. I spoke to the customer reps, etc. All the advice they gave me didn't work, and I ended up losing money trying things. So I was like, you know what, let me leave it. So I moved on to TradeStation, which is going much better. Personally, I feel it's going much better general user interface, and basically looks better, and everything's structured in a much easier way to follow. So you can set your take profit. It tells you what your take profit is, tells you what your daily profit or loss is, and all that stuff. And also I've tested it and I've used it on a live account. Whenever I set the take profit, whenever the price gets to that price, I'm out the trade at a profit. Or if it doesn't get to that price within a certain limit, then I can basically take a small loss if I can, etc., if I've caught it in time. Because there's a number of brokers, I advise you guys to look fully into what this broker is and if it's good for you. Like, each broker is different, there's different nuances to them and all that, so you need to really do your background DD and stuff like that. So the broker I use is TradeStation, so I'm going to use that to show you guys how you can go about setting up a trade, in particular setting up this Amazon trade, and also basically how you can manage that trade almost autonomously. So when I started doing this video, it was on the 26th of January, but since then I haven't actually had time to complete the video. Been busy with other things, other commitments. So the price actually has moved in my favor somewhat if I had set up the trade on the 26th of January, because as you can see, there's been a huge bearish engulfing on that day, and since then the price has moved from 2,780 all the way up to where it currently sitting at 28.79. So already you can see that my strategy would have pretty much been working, and if we set the take profit, etc., so we'll be pretty much saying that to profit at the moment. But we're still going to go ahead and try to place this trade just so I can show you guys how you can go about doing it. And by the way, it's the weekend, doing this video right now on Saturday, so the markets are obviously closed, but nevertheless, I'm still going to take you guys through the process. So first of all, let's jump straight from here to TradeStation, and bearing in mind that our first strike price was sitting at 26.50, so we're going to try and get basically a 10 wide spread of 26.50 down to 26.40. So now we've jumped onto TradeStation, and this is just the when you log in, etc. So I'm currently on a demo account. So if you started using TradeStation or you just want to know a little bit more on how to use it, then leave a comment below and then I can do a video basically showing you guys that. If a number of you guys want to see that, then I'll go ahead and do a video. So once you're on the main area, then you click on Option Stations Pro, which is pretty much TradeStation's dedicated options trading platform, and it's very good. Personally, it's very intuitive, it's easy to use, easy to navigate around, and also easy to know what's going on within your position. So now that we've loaded up Option Station Pro, and you can see pretty much you've got options analysis, manage, and search. So you can see I've pretty much got a trade that I'm already in on the demo account, and right now I'm sitting at plus $75, and the cost of the trade was $230. So I got paid $230 for that trade, and basically just waiting it out. So if you head over to the symbol and then click on Amazon, all right, and then you click on the equity on Amazon. So when that loads, you click onto options, and then this will show you when it loads. So this will basically show you all the expiries of Amazon. So for this strategy, what I usually do is I sell options that are like credit spread options. I sell them that are like 30 to 45 days. The reason for that is basically because I found it to be the sweet spot whereby you get a lot of premium relative to the max loss, if that makes sense. So the trade goes terribly against you, you're not going to lose that much because your premium is good enough. And if the trade goes in your favor, even all the way till expiry, then you're pretty much sitting on a lot, like you're sitting on a good premium. Now we're on Amazon, so let's have a look at 35 days, between 35 days and 45 days. So we'll just click on the 11th of March 2022, which is 41 days. And that's another reason why I like TradeStation Pro, is that it tells you how many days are left, whether it's weekly, and it tells you all that. So you don't need to start trying to calculate, etc. Strike price that we chose for the put was 26.50. So if we quickly head over just to confirm, so 26.50 was the strike price that we chose. Okay, so now let's have a look at what 26.50 is saying. So we don't seem to have a 26.50 because the market has moved quite a lot since we actually started looking into this, so I'm gonna pick on basically something, just a random figure, right? So where's the price sitting at right now? Okay, so the price right now is sitting around 28.79. So we'll see if we can try and choose around 2700 thereabouts. So let's have a look. Okay, so we can choose 27.90, right? So if we put basically between 2800 and 2790, so what you do right now is you want to create your spreads. So I've set it to be single spreads. You can also set it here from the spread. You can be vertical spread. That way it basically shows you the different strike prices of vertical spreads. But I prefer single spreads. That way I've got a full control of what I'm doing, and I could choose like crazy ass spreads, like $15 spreads, all that stuff, right? So first of all, you want to sell your first strike. You want to sell. So I want it to be a put. So I don't believe the price is going to go below 2800. All right, so that's going to be my first strike price. So I click on that, and because these are single-legged trades, I have to individually click on basically where my first strike is, like where I'm selling, and the strike that I'm buying, basically to create that spread. I've got 2800 selling, so I want to buy at 2790. So that way I'm creating a $10 wide spread. So my max loss in theory is basically $1,000, but what I stand to gain is $215. And you might be looking and thinking, you know what, that's crazy, right? The risk reward is I'm standing to lose 5 times more than I'm looking to gain. So the benefit of this strategy is, one, you've got a defined risk. So you're not selling naked options whereby it's unlimited risk. So the second benefit of this is theoretically I stand to win 2/3 of the trades. So if I place 3 trades, I stand to win at least 2 out of the 3. And the third benefit of this strategy is that I set a take profit between 30 and 45 days, it's more than likely that my take profit is going to get hit. You know, I'm not looking for 100% of the premium. I'm only looking for maybe 75%, 60 to 75% of the premium, you know, and when it gets hit, I'm out of that trade. So that way I effectively go from potentially losing 1 out of 2 trades to winning 2 really good trades and winning a little bit of premium for the third one, or winning 3 trades at least at a discounted rate. Down here, the quantity, this is the number of contracts that you want to sell or you want to do. So as you can see, your max profit, or my max profit if I took this trade, will be $1,075. My max loss is $3,900. And again, unless you choose to stay for the full duration until expiry, you know, I'm only in it for a short period of time. So 75% of that, let's say I'm looking to gain $750, between 60% 75%, so between $600 and $750 I'm looking to gain, you know. So I'll just go with one contract, for instance, right? One contract and one. So this is the sell leg, right? So that's why it's got minus, and this is the buy leg. The reason for that is basically you're selling one and then you're buying at a lower price. So that way the premium you would have got for the sell, you take some of that premium to buy. Effectively, you're not spending any money from yourself, but the net gain is positive. That way, that's why you get a credit of $215, you know. So again, if you want to know a bit more about options and how this is working, or why this is the case, let me know in the comments below. So once you've set your limit price, you set your spread width, you know, and you're happy to go, then you go ahead and click place order, and the limit was entered as a credit negative. However, the last quote indicates that it is entered as a debit. So that's what I'm saying, that it was entered as a debit of 1385. That means that basically the market's closed, right? So it's just gonna be crazy right now. So if I click yes, obviously nothing's gonna happen, but let's just say hypothetically, right? So all that, you just click yes. So it gives you a breakdown of what you're having. So you're selling a vertical, one contract vertical at 11th of March, that's the expiry. So this is your width, your spread width, 2800 to 2790, which is a $10 wide spread. This is your credit limit that you're going to get. So it tells you your basically your different legs. So you've got your sell to open, buy to open rather. So you're basically defining your risk, or I'm defining my risk. Route, intelligent, duration, day. The duration day means that it's going to be open for the whole trading market, but if you want it to be opened indefinitely, then you change that. And again, if you want to know how you change that, let me know in the comments below. And basically it just gives you a breakdown of the trades, etc. Max loss 795, max profit 205, right? So you go ahead and click OK. So it says it's rejected, obviously, because the market's closed, right? Nothing is going on. But if it had gone in, what would happen is, effectively, this is on TradeStation, right? What would happen is that this is basically your history of your trades and all that, your activity. So as you can see, the Q here, that's the trade that I'm in at the moment. So as you can see, the rejected is come up with my Amazon. But what it would say is that it will say that it's been entered. You know, it will say here, trade entered, and then it will tell you when that is being filled or not. And it will just be sitting there for the whole day, waiting for somebody to take your trade, or the opposite of your trade, you know. And that would happen pretty much on a stock like Amazon. That would happen instantaneous, because there's a lot of volume, you know. And of course, the big part of this is money management. You really need to define your risk. You know, you can't have a, let's say, $2,000 or $10,000 portfolio, right? And you're placing one trade, you're looking to risk $2,000-$3,000, you know, 20-30%. That's crazy. Risk 1 to 3% per trade. So guys, I hope this wasn't too much information. You know, there's a lot more to options, and I can't cover in one video. This is why I'm thinking about doing a series. Let me know in the comments below if you want to see a series on options trading, how you can go credit spreads, even buying puts, buying calls, all that, different strategies. I employ a lot of different strategies. I just prefer credit spreads because it basically gives me a monthly income, you know. So it's like I'm letting my money work for me, you know, which is good. I'm doing my own career, job, that I'm doing 9 to 5. I've got other things that I'm working on. I've got YouTube that I'm doing videos on. All of this, I'm hustling, you know. I'm hustling a lot, showing you guys how to make money in the market. I keep saying, let's get this bread, you know, so it's time to help you guys actually get and make this bread and keep this bread. I hope you guys enjoyed this video. If you're new to the channel, make sure you guys subscribe, hit that notification bell so you don't miss any further updates or uploads or anything. Thanks for watching, guys. God bless.